I'm going to tell you some little tips for buyers that are looking for homes out in Northern Virginia and also Maryland. And right now in Northern Virginia, there's limited homes. Actually, there's a lot of places in the US that have a shortage of inventory. So because of the mortgage rates are so low, under 3%, lowest ever in the history of mankind, I think, or in the United States at least, that is driving up a ton of new buyers into the market. I'm getting calls about first-time home buyers all the time. I have people that want to invest in real estate. I have buyers that want to upsize their home. In fact, it's kind of weird because right before the coronavirus pandemic, people were trying to downsize, but now people are staying home more often. They can work from home. People are actually trying to upsize, so everybody's asking for bigger homes, more bedrooms. Something funny that people are thinking about nowadays, which is never thought about before in the history. So people want bigger homes, more bedrooms, more rooms, home office, things like that. And also, swimming pools have gotten really popular. So a house that was about the same price, whether or not there was a pool, and a swimming pool really didn't increase the value of a property in Northern Virginia because you only got to use it about 3 times a month. But now, with the pandemic, nobody wants to go to a public pool. They want their own private pool. So homes with the pool are increasing in value like $100,000 and $200,000. Let me go back to the tips on home buyers. So if you're a home buyer in the Northern Virginia market, and what you got to do is you got to work with the local lender first to get a pre-approval. Getting a local lender is key because as a listing agent, which I do about 50-50 listing and buyer side, and as a listing agent, you want to pick a buyer with a local lender who I can talk to on a weekend. And I know that a good lender is going to come through within a short amount of time, because usually you have like 30-day of escrow period, which is when you got to get everything done and get your loan approved and close on time. With a lender that's not very popular or a big bank, they're not going to be able to close on time. It's going to delay settlement, which could be really bad in circumstances where you have to sell a house to buy the next house back to back within like a couple of days. So you can't take that risk sometimes with a lender that you have never heard about, or a big bank like Bank of America, Wells Fargo, Federal Credit Union, things like that. They're going to delay settlement, which could be a killer in a deal when you're representing the buyer. On a buyer, you need to understand this and find a local lender. And we recommend local lenders all the time. We have like McLean Mortgage and the Coastal Mortgage. We have US Bank that also works on weekends at night. So several lenders that we work with, they're always there to answer our calls when we need them at the last minute. And for some reason, those most critical and high risk deals, somehow there's always an issue with financing. So anyway, when you are competing with 10 other offers, what you want to do is reduce the risk to the seller. And how you do that is, there are 4 ways to do that. Well, number 1 is you want to reduce the contingencies. You have home inspection, appraisal, financing. Those are the 3 major ones. And there's also radon. So you have to kind of understand each situation. If there's maybe 2 offers or 3 offers, then maybe you can just do home inspection to void. But if there's like 5 or more offers, then you just want to do home inspection for information purposes only. And sometimes some sellers, they don't want any home inspection, not even for information purposes only. Now, it's a risk to the buyer, of course, but you're also shifting the risk to the seller. So sometimes you can actually, if you do it right, you can actually get the house even though your offer is not the highest because your contingencies are removed. So you have less contingencies like home inspection and appraisal and financing. The appraisal one's a big one too, because a lot of times appraisal doesn't meet the sales price. So if the house is $500,000 but the appraisal is only at $490,000, then as a buyer you have to make up the difference of that $10,000. And if you are going to have that appraisal contingency in a multiple offer situation, you better put some guarantee that you're going to make up that difference for that $10,000. Sometimes I have buyers putting down that they'll guarantee up to $20,000 or even $30,000 above the appraisal amount. And a lot of times it doesn't really come that short. Most of the appraisals I've seen come short maybe by like $10,000. But on paper it just looks a lot better when the buyer says, "I will guarantee up to $30,000 in appraisal." Or some people, they'll just say, "Oh, you know what? I have enough cash in my pocket, so I have 20% down. I have another $50,000 to put down into the house if I needed to. So I will waive the appraisal contingency altogether." So some buyers do that. And number 3 is financing. And some people that have jobs that are very stable, been in the business for like 10 plus years in the same line of work, especially in the federal government field, your job is very stable. So those people are just waiving financing contingencies altogether. So we have I had a couple buyers this year that we put in an offer with no contingencies at all and put a higher earnest money deposit, and they were able to beat out 18 other offers, even though their offer was $30,000 less than the highest offer. And when you do a escalation clause, you get to see the other offer that was submitted that was like higher than my client's offer, and I saw that the other offer was $30,000 higher, but they had contingencies. So my client got the house because they had no contingencies. So that just because you put the highest price doesn't always mean you're going to get the house. Third one is being flexible with the settlement date. And a lot of times you have to talk to the listing agent and understand what the seller is looking for. The seller may need a rent back. If the seller needs a rent back for 30 days, it may make sense to give them a free rent back, because as a buyer, you don't really pay mortgage the first month anyway. So during that time, you can tell the seller they can have a free rent back for 1 month, or if they just need it for 2 weeks, whatever it is, that being flexible with the settlement date is another way for the buyer's offer to be more attractive. The fourth one is the earnest money deposit. So when you're bidding on a house about $500,000, typically you would only put like 1% down for the earnest money deposit. But when in a multiple offer situation, you want to put like $10,000 or $15,000, like 2-3% of the home price. And that's going to make your offer more attractive because it's telling the seller that you really love this house and you're very serious and you're not going to back out during the escrow period when the road gets a little bumpy. So for example, if you, let's say you got the appraisal contingency out of the way. You have no contingencies, right? But you put $10,000 down for earnest money deposit, but along the way, you find a better house and maybe a better deal, and then you're like, oh, you know what? I'm gonna forfeit that $10,000 and go to this other house because I think that's worth more. So that could happen. Some buyers do that. So the seller is gonna want that offer that has no or lesser contingencies, a high earnest money deposit, sometimes quick close, or basically flexibility in the closing. Sometimes they want like 2 weeks of closing. Sometimes they want 60 months of closing or 60 months delay in closing. And the fourth one is working with the local lender. So there you have it, folks. So those are the tips for buyers. And if you're a buyer in this market, please give us a call. We have many experienced agents on my team that can help you. And there's a lot of savvy ways to kind of work around all these little obstacles. And mainly, being in the business for a long time, that kind of helps you understand the tricks of the business and how to get that offer in to be most attractive so that your offer can be selected over other buyers. Did I get everything? I'm trying to think if I missed anything.